And it's time for another Tom and Shane podcast. Glad to have you with us. Thanks very much for being here. And we want to remind you make sure you subscribe to our channel. Like hit the notification bell. You'll always be notified when we have another podcast. And like us and leave a comment because YouTube really likes that. And they add some, clout to our search. So by all means, do that. Also, Patreon, we got some great benefits for you to support the show monetarily. So we hope that you will look at the description below and do that. And also, we're brought to you by Patreon, or not Patreon, but StreamYard. I'll get it in a minute, Shane. StreamYard, we do that to make these wonderful podcast. So easy, and anyone can do it. If I can do it, anyone can do it. So today we want to talk about money. Is your money making money, and the markets and stock market? And I don't know about you, Shane, but I think when people start talking about stock markets and all this stuff, man, their eyes kind of glaze over. And what the hell are you talking about? Could we make some sense out of this somehow, some way?
Well, absolutely. I've been really excited that we would take some time and talk about this. This is something I know about. So we're going to give you all a crash course in the stock market, and we're going to really start wide open with the market itself. You can see the numbers again today. So 65% of the NASDAQ stocks, including the FANG stocks, are down anywhere from 30 to 70%. So we're in a bear market. And what you see isn't a dead cat bounce where the market falls off and then trades up like it is today. It's up 271 at 34,600. And now the US S&P 500 is up 42 at 4,500. NASDAQ, of course, at 14, and it's up 167. What you're seeing today is what's called a short rally. And the importance of understanding a short rally is very simple. Once a bear market is established, the traders start taking over. We're going to get into shorting because I want to review several of the FANG stocks, particularly a couple we've talked about that are going to split, and one I expect to, which is Netflix. I expect Netflix to be the next one, split 10-1. But shorting is a interesting option. You're allowed to sell a stock in what's called a short account, separate from a cash account, separate from a margin account, and separate from a future option account for puts and calls. So in your short account, you sell a stock you don't own short, and you have the cash in your account, equivalent to what you sold it at. And you have to have 150% margin in that account, so your brokerage firm isn't exposed. Meaning, if you shorted a stock at $1, you'd have to have $1. 1,000 shares at $1, you'd have to have $1,500 in the account, because if the stock goes up and you have to cover that, you've got to have the money to buy it at a loss. But of course, if it goes down, you can buy it back at any time and make a profit. So that's a short account, very very, very basic. Cash account, simple, in the context of you open up an account, a cash account, you put money in, and you buy and sell stock. Hopefully low, sell high. A margin account is different unto itself and separate, where you put in grade A stocks, stocks that pay dividends, stocks that are trading at a high value, and that the firm that you operate with will allow you a margin on it. Say, for the sake of argument, Amazon, they might give you 50%, so you could buy $1,500 on the basis that you have 1,000 shares of Amazon in your account, and that covers the house. So if you buy more of that or another stock and it goes up, great. If it goes down and you decide to sell it, well, you have the Amazon stock in your account, your margin account, to cover any losses and sell a portion of that to make it up. And then finally, the options account, where you can buy what are called futures, and those are puts and calls. Puts and calls are great. They're the best leverage in the market in a short bear market. Here's why. When you buy a put, you're saying you're looking at buying a put to buy a stock back cheaper because you think it's going to go down. And if you buy a call, you think, it's going to go up. So you buy the call. And very often, these calls, depending on what length they are, meaning how many days or weeks, because there's a limited time to them, If you buy we'll say a call on $1 stock, and you buy a call at $5, that it's going to go to $1.05. If it starts to climb, that option goes up in value because someone else will maybe want to buy it, including someone who's short. So if the stock goes to $1.05, your call could be worth $1 to $2, $1 to $3 when you paid a buck for it, and so better leverage. You can make 100 to 300%. If the stock were to go to 15, someone's going to buy your call if they're short because they don't want to get stuck having to buy it out of the market and risk a bigger loss. So your call could go to $5 to $10. It
Hmm.
works the same on the reverse on a put. Again, someone that holds the stock writes a put. You can buy it, has a limited time on it, and if you buy it and the stock drops, the lower it drops, the more your put becomes valuable. So that's the crash course in how you are in the market.
All right. Morning, Bruce. So glad to have you along with us. Bruce wants to know, how's my Walmart stock doing, Shane?
Yeah, well, it, it's
It's
actually
been,
holding up. It's
yeah.
one of those amazing stocks that's holding up, and the reason it's holding up is because of the value of the cash, and the fact that it's a stock that is renowned for success in its operations as a family-owned company, and some of the wealthiest people in the world, of course,
Mhm.
the Wall family, as we know.
Mhm.
I want to jump back really quick because I want to go through 4 or 5 of these stocks before we end the show. So let's look at Facebook right now. It's Meta Platforms. They changed the name to be, I don't know, Impress.
Mhm. Whoops. Sorry.
Bang. Sorry. I'm sorry. Okay. So we know it's gotten banged because, it was at what, 380, right, Tom? So I mean, it's down to 213, and that's clearly not a good indicator. But one of the interesting things about it is that while the stock is trading at 218, I still think it could go to 125. What you have 34.5 million or 32 million shorts against it. So these are reported shorts saying they think the stock's going lower. Most of them shorted it higher, so they're in a big profit margin. They don't need to cover, and they'll wait and see if it stalls and goes lower. But the reason this happened is because uh, you know uh, Facebook split years ago, and there's 2.3 billion shares out on it. That's why when we talked about Google, made the call. We've called it for what, over a year, Thomas, that Google would split, and they're splitting 20 to 1, and then of course you have Amazon. Amazon's splitting 20 to 1. So both of these stocks have an interesting situation to them because they're coming into a bear market, both of them, at a higher price. And one of the reasons companies split the stock isn't just to increase the number of shares, but to lower the price. So their timing is either going to be good or the timing is going to be bad. But the problem that you have right now is that there's like 35 million shares short on. Excuse me. Trying to get it. Here we are. What do we got here? I've got Amazon here. Oh my gosh! Come on, guys. Uh, Trading economics, one of the best places
Mhm.
on the planet to
Mhm.
go online. It's just punch in trading economics, 20 million thing. It'll come up and click on it. 20 million piece of information. So Alphabet's at 2,800. So 20 to 1, Tom. Right? That's 180
Mhm.
bucks.
Yeah. That makes it more
And
affordable for the normal
that's right.
investor to jump in on
And
that. So that's a
It's
good deal.
oh, it's the only stock I would even look at buying,
Mhm.
but not until after the split, not till the price is adjusted, and not for at least 2 weeks. No matter what the stock does, goes down or go up, likelihood it'll go down because of course right now
Mhm.
there's, are you ready for this? 300 million shares out, so they're
Yeah.
going from 300 million shares to six
Mhm.
billion. But here's the interesting difficult. There's 2 million short on it right now, and so 20 to 1, that's 40 million short. So if you
Mhm.
remain short, and your short increases with the split. So there'll be 40 million shares short after the split on Google, and Amazon's the same way. That's why we wanted to talk about it, because here's the giggle. The public float on Amazon is 442 million. And, Bezos has kept it this way to maintain the price over the last 30 years because of the need for cash, number one, the need to have a lock on who owned the stock, because he knows everyone that owns the stock. But the short interest on it is 3.8, 4 million. So here we go again. 4 times 20 is 80 million shares short after after the split to what are we at here? 20 to 21 will be 8 billion. So now they'll all be in the league, of a lot of the other FANG stocks, Facebook, and
Google and Netflix and Amazon and Facebook.
Amazon and Google
the FANG
do
stocks,
the same as
yeah.
Facebook. And, the FANG
Now,
stock. So
now Facebook's
again,
a buy, Shane. Facebook's still a buy.
Rattling this. No, it's not a buy. No, sorry.
Yeah, it is. According to Market,
this is a bear market.
According to Market Watch, it's a buy. It hasn't changed in the last. It hadn't changed in the last year, 3 months, 6 months. I'm just pointing it out for listeners. I'm not disagreeing with you. I'm just pointing it out.
And I'm going to explain why it's not a buy. None of these stocks are a buy. There's no stock out there unless you're really interested in a stock. Buy one that pays a dividend. That's the only thing I would look at. But having said that, look, the U.S. is going into a recession, and probably a very deep one. It's going to come by May, June. Number one, it could even turn into a wacky depression, depending on a world war and what goes on in this issue that's going on with Russia and Ukraine. Number two, the Federal Reserve is raising the bank rate, talking about doing it 7 times, and we've gone over this, and I'm going to go over it quickly today. The reason they're raising the bank rate, because when the bank rate goes up, the price of bonds or debt, your debt, goes down. Right. So they want to raise it not because of inflation. They want to raise it because no one's buying your debt. You literally are stuck now. You've got this huge debt, 28 trillion, and 20 trillion of it's held inside your country. The great generation is living off it or selling it, and they should, because the value of those bonds are going to drop in price, and even though the interest rate on them is growing. But the other thing is that the baby boomers, they're sitting back like us and living off it, and to a certain degree. And the newer generations since 65 and on aren't buying it. One really interesting thing that has to be understood about your debt. This is interesting. So in that margin account I mentioned at the beginning of the show, you can buy a U.S. debt, U.S. bonds, and you can do it on 10% margin. In other words, you could buy $1 million worth of American bonds, and for $100,000. But if they start going down, you're going to have to sell them. And even though the interest rate on them is going to be climbing, you're stuck in a very bad range. So you're better to sell them, hopefully make some money, and wait, because they're going to go a lot lower.
Well, some of them have a time limit how long you have to hold them too.
That's right. If they expire, you get paid your interest, and you get your money back, and so.
Yeah, you don't get the full interest; you get a portion of the interest back. But
that's right.
There is a certain amount of time you have to wait. It has to accumulate some interest in order for you to sell it and get paid.
That's right. And right now, you're looking at a situation where currencies are holding up. The euro's holding it at $1.10 against the U.S. Yeah, the Canadian dollar is getting stronger at $1.25. But when you look at bonds, boy, folks, the 10-year bond right now, if you buy in the market, it's 2.32. So as it gets cheaper, that interest rate is going to go up. That's more than what the United Kingdom gets at $1.64. Japan's at 0.24. Australia is at 2.7, so they're moving up. Germany's 0.51. Brazil 11, India 6, Canada's at 2.3, Italy is at 2, so they're less than the U.S. I'm going through these because this is an interesting aspect of what we're talking about today. France is at 0.97. These are their 10-year notes that they can all own individually. And of course, Greece is at 2.8. So the United States 10-year bond at 2.3 is heading towards what Greece is paying for people to own their 10-year debt.
Yeah.
So I'm trying to run through these numbers quickly because we don't like to make these shows long. But a couple of things you need to know is, well, what are targets? There's no open target to a bear market. We saw this in 2008. If there's a recession or worse, there's all kinds of problems. As they raise interest rates, the Fed rate, markets will trade off. They're
By
not.
the way, a bear market's a light market, and a bull market is a heavy market. So just to.
Yeah, a bear market's a buyer's market, or
Mhm.
a bull market's a buyer's market, and a bear market's a seller's market. I mean, that's what it is.
Yeah,
So all
that's
these
it.
swings you're seeing every day are professional traders that are, they're covering shorts to make money daily, and it goes up 200 or 300, 400 points. And as it's going up, they short again, because they just know it's going lower. Um, so the advantage you're getting right now is if you didn't sell in November and December, we gave you 2 months of warning on the top of the market. Remember, Joseph Kennedy said, buy low, sell high. Shane says your first loss is your best loss. Are you there, Thomas? Oh, we may have lost
I was
Thomas.
doing
So,
something else, and I didn't want to. I didn't want to
what?
be, ducking around doing stuff.
Oh,
So
okay, cool,
I
no
was looking
problem.
something up. Let's see. Craig wants to know, by Exxon Mobil a record of profits. I'm not sure if they have. I mean, when you factor in inflation and the factor of the world market, yeah, why not? But
Well,
so what?
look, the bot, right now you're going to see an adjustment on what we call the Dow 30. I expect Walgreens and probably what did I pick the other day? I was looking at this and I think it's going to be and the Dow. The Dow itself is public, so I think the Dow 30 will go off the Dow 30 list of 30 companies, and Amazon and uh, um, Alphabet will replace them. But look, when you're looking at something as significant as Chevron, Chevron's a remarkable company. I mean, it's one of the Rockefeller's original companies that ended up being consolidated after broken up. But the remarkable thing about it is that Exxon pays a 25-cent dividend, and they're what the price of oil streaming now at 110 to 15, probably going to break its 147 top sometime in the next couple of months if this war in Ukraine continues. It just will. So
Yeah.
you're looking at an opportunity in the oil industry of seeing something of these things happening. I've got to mention Occidental took a big jump. um, the stock advocate, oh man, just his name left me. Icon. He was on CNBC this week talking about he
Mhm.
wants the board changed and the CEO of Occidental changed. So he went in and bought it, and the stock jumped like $35. But he's now got 5% of the company,
Mhm.
and he's asking to buy it out, for $52, I believe. So he wants to buy it, own it, and restructure it and set up new management, and then he'll turn around, make it public again. That's what he's done all of his life, and quite successfully.
Yeah. The other thing to look at, Shane, that this morning I was looking at lithium. Lithium's up 400% from a year ago for those electric
Yeah,
car batteries that we're all going after so hard.
we another call that we made
Hmm.
incredibly, and the reason it was a major call is it's right now it's at $497,000 a metric ton.
Yeah.
So it's heading to 500,000,
Hmm.
and it's around 200,000 when we first talked about it 2 years ago. The
Yeah.
reason we talked about it is Frank Justra did to the lithium industry what he did to the uranium industry. He went out, created a uranium company, bought 20% of the uranium deposits in the United States, and then sold the deal to the Russians. Well, he did the same thing with lithium. 2, 3 years
Mhm.
ago, started a lithium company, went out and bought all the lithium deposits in South America and in a couple other places around the world. Turned around,
Mhm.
sold it to China.
Yeah,
So
there you go.
China, excuse me,
Hey,
China has the
money's where
most.
you find it.
That's right, baby. Money runs where it'll make the chicken fat,
That's
right?
right. Yeah. Well, let's see. Craig says dividends are great if you need income. Retirement stocks are based on growth, and yeah, I'd have a little bit of both. Probably, I'd have some blue chips for retirement and some dividends to make your life easy.
Yeah, and if you have, we call them retirement savings plans
Hmm.
or RRSPs up here, or RSPs. Look, if inflation comes, and it will, it'll wipe it out. You're better to take that money, pay the penalty, pay the taxes, get the cash out, and use the cash now, or because 30 years from now, it won't be worth anything with inflation. And even if inflation gets under control, they'll have inflation at 2, 3% a year. So if you keep 10 grand in your account at 2%, interest,
Hmm.
and inflation's three, you're going to
Yeah.
end up with nothing at the end of the day. So
Hmm.
all this money that you think you're going to save for retirement is really for the banks to lend back
Yeah.
to you. So I,
Yeah.
I am not a believer in retirement savings
Hmm.
plans,
Yeah.
regrettably, but
Hmm.
that's what the market's telling us right now. I've been through this 5 times, so
Yeah.
I think I have a
Well,
pretty
even
good
yeah,
understanding of it.
yeah, even your Social Security isn't going to keep up with inflation. I mean, that's a lousy 3%, I think, and
That's right.
I mean, that's you know, every year you get a little bit of a cost of living increase, which is what pennies on the dollar, which is almost nothing.
Well, I am betting by August, September that Biden will send out another check to everyone at Social Security like he did last year for $1,600, and then get up and say, "I did that.
Yeah.
I did that for you."
Well, the other thing that's coming up too is student loan, the forgiveness of student loans. Nobody's paid on their student loan for the past 2 years, and that's going to come up on May 1st. Now they did do away with uh, the income tax credit, and they stopped that, and the foreclosures they stopped that. So
Yeah, and we came up with an answer. Here it is, very simple. We say when the student loans during COVID and the money sent out, they dropped.
mhm,
Students paid off 200 million,
mhm,
or excuse me, 200 billion. So, but it's
yeah,
back to 1.7 billion. So here's what the U.S. does: they go to all these people that owe money, average around 35,000. Uh, get them to sign an agreement that they'll pay 10% of what they owe over a year. At the end of the year, the agreement will say, "Okay, we will give you X number of dollars to go buy a house." And Fannie
mhm,
Mae and Freddie Mac, government-owned institutions, will lend you the money. They'll
mhm,
give you enough to buy a house and do some work on it and have money in the bank and
mhm,
take your debt, your student debt, into that mortgage. Now
mhm.
you're in the game. Now you have a piece of dirt.
Yep.
Your loans are paid off. They're going down. They're invested in American real estate, and this great generation, from 85 to 2005, they have a shot. They're in the game, baby.
Hmm.
Simple
Yeah.
solution to what isn't a difficult problem.
Yeah. Well, the other thing too that we've said is all these tech stocks that we've talked about this morning, all the FANG stocks, Facebook, Apple, Netflix, and Google. Those guys need to buy into Social Security, and
That's how we said
yeah.
we could solve the Social Security problem. Back in
Mhm.
2008 or 7, when Bush was under the gun with the collapse of the market, similar to what we're seeing today, by the way, and it's based upon mortgages, mortgage-backed securities,
Subprimes, yeah. Hmm.
prime that were, they were mortgages on residential property consolidated by U.S. banks and then sold to foreign banks for a
Okay.
bucket of money. And then they took that money and they put it in the market, and the market crashed, basically.
Right.
But
Yeah.
the bottom line, I'm just a reminder.
Mhm.
So they get the big banks together, except, all of them. There were seven. Secretary of Treasury under Bush sat him down in the boardroom in the, the Treasury Department and said, okay, here's the deal. You're all taking this money. And it
Yeah.
was billions, if you remember. They were
Mhm.
forced
Oh, yeah.
to borrow money from the U.S.
Mhm.
government. And they didn't put a caveat on it and say, oh, by the way, this money can only be lent out. You know,
Mhm.
you,
Yeah.
that's what it's for. But they didn't. They
No.
didn't put that caveat on it. And so the banks used it to run the market.
Mhm.
Well, the market, in '08, after Obama took over, dropped to 6,900. So guess what they did with the money? They bought the market. That's
Yeah.
what started the bull
Yeah.
market.
Everything
Well,
was on sale, so why
now,
not? Yeah.
yeah. So
Well,
you
the
take
other thing too,
no,
Shane,
wait,
the
let
other
me finish. But let me finish.
all
You
right,
take
go
the
ahead.
same concept for Social Security, only
Mhm.
you sit the FANG stocks down, the ones you just mentioned.
Mhm.
Facebook, Apple, Netflix, Amazon, and Alphabet, and you
Mhm.
say, or Google, and you
Yeah.
say, okay, guys, uh, you know, the Social Security has its own debt. It's like $6 trillion. Special. It's a special debt. So we're putting $1 trillion on the table. It's going. We're going to split it up amongst all of you. 200 billion. You're going to issue us preferred shares, and you're going to pay 10% interest every year on those shares
Mhm.
because you're the best companies in the country, and you're somewhere.
Mhm.
You're going somewhere.
Yeah.
So you don't pay taxes. We got to get money into Social
Mhm.
Security, so you're going to provide it. Oh, by the way, these shares you give us, these preferred shares, have a conversion privilege of 10 to 1. So if you don't pay the interest, we can convert these preferred shares to common stock. Then we'll sell the MFs, mother Fs, into
Mhm.
the market to make up the difference. Simple solution funds Social Security completely forever.
Yeah.
Forever.
Yeah.
The problem's over.
And theft, just like taxes are
That is, yeah.
from the companies. Well, the other thing I was going to mention while you're talking about the banks is that the banks going after the market rather than lending the money out.
Yeah.
Back in 2008 with the subprime scares, uh, they putting the money in the market or someplace else was more profitable than lending it out on home loans at low interest rates. So
Absolutely correct. Not only that, but it was leveraged because all
yeah.
the stocks they bought were each other's number one, and those
Hmm.
are all marginable stocks. So you saw the stock market turn and scream. It
Yeah.
went from 9,600 in March, excuse me,
Hmm.
of 2008 on a bull run to 35,000. Oh my goodness.
Yeah. There you go. Grego, so what do you think about crypto? We've talked about crypto quite a bit on the our podcast, Shane. We're a little iffy on it. I think I don't know. It's there's too many. The it's fairly safe from fraud, but not. It's still a little. It's not black market, but it's sure gray market.
No, I don't think so.
You don't think so?
There's over 1,200 of them, and
Yeah.
regrettably, here's the tell. My tell came true. I've been saying this too for I don't know a year. Gold is not safe harbor anymore. I mean, it's
Yeah.
barely holding $2,000. Yes, there isn't a lot of it. Yes, it could go off the rails and like go into the stratosphere if there's a bad recession or depression. But the bottom line is that you can't go in and with a gold bar to Walmart. Now with silver
Hmm.
coins, I've always said for 10 years, buy silver coins. They've basically been in the same range.
Hmm.
And finally, going back to the crypto, I'll tell you what my feeling is. In this market today, with people around the world and it being a global market, Bitcoin became the bellwether of scared money. And the
Hmm.
reason it dropped from 64,000 to where it's at today at 43.
Oops. Sorry. Damn it.
Oh, did we go? Hello. All right. So the reason Bitcoin is now the tell. Watch Bitcoin in relation to this bear market. It's where scared money will go back to. I'm not saying you should buy it or not, but it's a measure. Use it as a measure, like we used to use gold in the old days, because gold is just it's not irrelevant. So Bitcoin can be used anywhere in the world, converted to any currency. Pretty hard to walk. You can't get on a plane with a bar of gold because
Yeah.
you can't have more than 10 grand. I
Hmm.
mean, so
Yeah.
but you can walk on with a credit card or a phone with millions of Bitcoin on it, and they don't ask you about it. So they may change the
Hmm.
laws about that. We'll see. But yeah, Bitcoin
Yeah.
is the tell. You just
Hmm.
watch it every day. It'll tell
Hmm.
you a lot about the market. When the market, as I said, is swinging up, that's a short. It's a short day to play, and if it's dropping down, the
Hmm.
next day or itself. Now, if it
Hmm.
starts to bang, meaning moving higher, that's because everyone that's been margined out, particularly in China and Russia, with their markets, their accounts in other places, safe havens,
Yeah.
they've been blowing it out, and people always tend to sell their winners first. It's
Hmm.
I don't know, it's just human nature. Oh, I
Yeah.
don't want to sell this stock I'm losing money on. Look at the Bitcoin. I mean, I'm up 100%, I'm up 40%, I'm up 30%. I'm going to sell that. So that's
Yeah.
what they
Right.
did. That's
Yeah.
what they did.
Sell it and get the money back. If you want to know Bitcoin prices, coinmarketcap.com. Coinmarketcap.com has them all listed, what the prices are and all that. So
That's right.
if you want to find out more about crypto, that is the place to at least start and go over and look at. It'll tell you
Or
how many are out and what they're worth and all that.
That's right. And I want to mention trading economics, lowercase.com/, and click on it. It'll open up. Look, go to the markets bar, and the markets bar will give you currency, stocks, commodities, bonds, crypto, earnings, and holidays. Click on crypto, and it'll give you every crypto out there and what it's
Mm-hmm.
trading at. It's quite. I mean, the amount is phenomenal. I mean, it's
Yeah, a
you know.
lot of people are looking to it, and so, you know.
Well, yeah, because the two
Mm-hmm.
big ones are Bitcoin and Ether. The
Mm-hmm.
reason, quite simply, was Ether came out as a more of an investment for wealthy people, and they jumped on it. So,
Mm-hmm.
excuse me, you have wealthier people that bought Ether as opposed to Bitcoin,
Mm-hmm.
and that's why it's so remarkable. And when you talk about capitalization, because we started to show off and me blabbering about the number of shares out on companies, Bitcoin only has 20 million coins issued, and
Mm-hmm.
they're at just over 19 million have been mined. So there's still more to
Yeah.
be mined. But once they're mined, that'll be it. So they're not going to issue more coins. So
No.
it's just it'll trade based on the fact that
Mm-hmm.
there's not many of them. I mean, just like public companies trading, at earnings. How many times earnings are they trading at?
Yeah. So, nope. I think that is something to certainly look at. I'd rather look at cryptocurrency than I would non-fungible tokens. Uh, maybe we should make our shows
Yeah, no,
non-fungible tokens.
yeah, that's right. Virtual, baby. That's what it
Yeah,
is. It's virtual, like
if you
all
want to
the
buy
traders.
one of our shows for 100 grand, we'll talk to you.
Yeah, exactly. Yeah, and like you say that Facebook is a buy, and I
Mhm.
still say it's going lower. But having
Mhm.
said that,
Yeah. Mhm.
it's now in the realm of reality for
Mhm.
that. What for 50 years people bought stocks, or with a
Mhm.
ratio around 16. Well, it's now
Yeah.
back at
Mhm.
15. PE ratio 15, and it's incredible because it
Mhm.
was at 35.
Yeah. Mhm.
So
Yeah.
and now all these bubbleheads on TV are saying, oh, all these companies, now they're at that grade level of 16, 15 to 18, PE ratio. But guys, with a recession, with
Mhm.
everything that's happening, all these numbers are going to go down. I mean, you go from McDonald's to Starbucks coffees, anyone that's shutting down out of Russia, it's going to affect their numbers in the quarters. So all these
Mhm.
companies are going to have to get through the next 3 months with
Yeah.
a
Mhm.
recession in the U.S. and because of gas and inflation
Mhm.
and food costs, and
Yeah.
also because they've lost revenue from both Russia and China because you called it, baby. That missile
Mhm.
that Russia launched 2 weeks ago and showed the
Yeah.
world they didn't build that supersonic missile. It came from
Mhm.
China. You and I both
Yeah.
agree on.
Yeah. That's yeah. Yeah, it's a rice rocket. That's what it
Yeah,
is.
it is. Yeah, yeah,
No matter
exactly.
where it comes from. Yeah.
Yeah, that's right.
All right. Um, all right. Well, I think that's going to wrap it up for us, Shane. So say goodbye. Tell the folks so long.
Okay, well, be happy, be safe, everyone. Thanks for joining us. I hope you enjoyed the information, and we'll tell your friends. Now it's on the record. You can see where I was right and wrong for the rest of the time.
Okay, there you go. Hey, don't forget, thanks for watching. Don't forget to subscribe and like us because YouTube likes that. So does Facebook, of course. And we will be happy to, one of the things about subscribing to YouTube, Shane, there's an 80%, if you subscribe to this channel, there's an 80% chance you will not get Legionnaire's disease. 80% chance. We guarantee it, man. 80%.
That's fabulous.
There you are. So why would you not want to subscribe? Hit the button down in the lower corner of your screen or down below the podcast itself, and we'll see you on the next podcast. But we have to remind you before we go that we are on radio tomorrow, 8 to 11 a.m. Mountain Time, KMMSAM.com.
Saturday, not tomorrow.
Saturday. All right. I don't know why I keep thinking this is on Friday. I don't know. It's Saturday.
So
yeah, it's Saturday morning.
We're having so much fun. We used to be on every day.
Well, that's true. Yeah, I'm looking at the crawl and I'm saying Friday.
Okay,
I'm senile. I've got Brandon disease, I guess. I don't know, man.
I got your back, pal. I got.
I know you do. I know you got to correct me. So, yeah, but there's nothing to join. There's no personal information needed. You just go over and click a listen now, and boom, you can hear us anywhere in the world. 8 to 11 Mountain Time. Listen live, KMMSAM.com. Why would you not want to do that? So, all right. That's going to wrap it up for us. We'll see you on the next podcast.